contributor on the show. He's our accountant and helps us out with a lot of the stuff on the back end. 646-490-0394. To call into the show, guys. Again, that number is 646-490-0394. Steve, what's up, man? Welcome to the show. Can you introduce yourself?
Hey, guys. How you doing? I'm Steve from accounting. I've been a CPA for going on 30 years now, and Fresh and Myron are my personal clients. I think I met you, Myron, when you were doing Unplugged Fitness. When you were doing the fitness
way
channel.
back.
Yeah, that's when we started, right before you did Fresh and Fit. So, yeah, it's great to be here. I'm, I love the format, doing the Q&A. If you guys have specific questions about doing a startup business, if you are, involved with real estate, how to structure yourself properly, how to take advantage of the new tax codes, that it just got passed back in July 4th of this year. And if you want to talk about, becoming an accountant or something like that, any one of those questions, just feel free to ask.
Cool. Perfect. So guys, we're going to open up the phone lines right now. Bear with us real quick while Mo turns them on. Makes a little bit of noise, as you guys know. But yeah, man, anything you guys want, whether it's this open, real estate, credit, taxes, are you looking at a deal, maybe something, cryptocurrency, or the course?
Crypto too, yeah. I'm very highly involved with crypto and the tax effects of that. So definitely feel free to ask me anything about that. I'm very well versed in crypto.
Well, the course ends tonight with Charlie and Miguel, guys. So if you haven't gotten into it,
get in there while you guys can. Then
we did a Zoom call yesterday with CastleClub, of course. All the other channels yesterday, so it's pretty good.
Let's drop that link in the top description for them too. Crypto course is live.
So Steve, real quick, taxes, right? Let's say I bought crypto and I gained maybe like $10K when I stole a coin. I have to report that to IRS now, or it doesn't matter?
So here's the thing with crypto, and a lot of people get wrong, is like they buy crypto, they hang on to it. If you hold on to it and it goes up in value, then it's an unrealized gain. It's not a taxable event.
Yeah.
So that's where a lot of people get confused on. So basically, it depends on when you buy it and when you sell it. If the value of it is higher when you sell it, then it's a gain. If you happen to hold on to that crypto for more than 1 year, then it's taxed at a beneficial rate. It's taxed at a long-term rate versus the ordinary income tax rate, which would whatever be your tax bracket would be, which typically is going to be higher. So it's beneficial to hold on to it for a year. With crypto, sometimes it's not easy to do that. The crypto market is so volatile, and a lot of these guys like to almost like day trade in crypto, which is, in my opinion, it's kind of a hard thing to do because there's not a lot of historical data there in order to do that. So you really got to know your stuff. There's a lot of pump and dumps out there. You got to really know the project. There's ways to evaluate that, any specific project. I like, for me personally, sticking to layer one coins that are on the chain, because I think those are the ones that have the most utility. I think there's going to be a lot of stuff going on with Ethereum, and that layer one, a lot of projects and a lot of exciting stuff happening with that. Not that it's the best technology, but there's a lot of stuff built on it, I think, going into the future. So that's something to look out for if you guys are, looking to get in some cryptos.
Yeah, Ethereum actually went up, right? So question, let's say I bought a watch with Ethereum directly. I said, hey, to my jeweler, here's, I don't know, $20K for this watch through Ethereum. What would that look like for taxes? Would that be a taxable event or not really?
Yes, it is, because basically you are getting rid of that and trading it for the value of the watch. You're basically selling it, right?
You what?
You're having to cash that in, give it to the watch guy, and he's receiving on that day, and whatever the value of it is that day. hopefully you are at a gain position when you got rid of it to get your watch.
Wait a minute. Damn, I didn't know that. Okay, that's a good one, bro. I didn't know that one. Wow.
Oh, you didn't know that?
No,
I know you like watches and cars.
I thought I was good.
Yeah. So definitely, that's basically a taxable event because you're trading that actually for cash.
Yeah.
So, yes, it's an exchange.
All right, there you go, fellas. Now y'all know too. Holy moly. Wow.
There's also, I have a book, if you guys want to talk about some of the specific stuff with it, with tax crypto, if you go to my bio link tree on my Instagram, I have a bunch of books in there that are, a lot of your followers have actually navigated to and bought, and I've gotten some good feedback on it actually, because I kind of did it in a way where it's for people that are not well versed in it, and it kind of walks you through. A lot of them are very simple reads. They're short. They're to the point. and they're relatively inexpensive, and there's a lot of value in there. So I spent a lot of time because I built those books in a way where a client come to me, such as yourself, where I would advise them and talk to them in almost layman's terms where they can understand, because they're busy running their businesses, and it's my job to make sure that they not only stay within the legal bounds, but they take advantage of the tax code to the maximum ability to make sure they don't they're not paying more taxes than they have to, because that's not their responsibility.
Yeah. So I've been in Miami for 12 years now, and it's crazy because all the big wigs that come to Miami, they come ball out, they go crazy, and they disappear. But then I wonder, tax season, right? It takes about like 4 to 5 years for them to actually come after you after a while. And some of them, they pay their taxes, bro. So to me, it's kind of
here's how it really works.
Yeah.
And I'm glad you're almost correct in saying that.
Yeah.
What I see is typically when people don't report, like 1099s, for instance, right? Now there's also on crypto, there's going to have to be, there's the 1099 Q. That's the 1099 I might be misquoting. I think it's the 1099Q, but they're starting to institute that especially next year. So any transactions you have, it's going to come from major exchanges like Coinbase or any one of the other larger ones. Coinbase being the biggest ones. They're going to start to report transactions where people are selling on their exchange. So a lot of people, what happens is they don't go and move their crypto to other chains and trade. They'll just typically trade the main cryptos right within the app of Coinbase, and there's going to be reporting similar to what you get when you get your 1099 composite with like Merrill Lynch or Ameriprise or something like that. It's going to be very similar to that. So the problem is a lot of these 1099s that they're going to get, they're not accurate. So you got to make sure that you're keeping track of it sometimes, especially if you go off chain and come back on to Coinbase. So if you buy ETH, you get in, go to ETH and you start doing some transactions, then you come back and you offboard your crypto. That's where a lot of problems come in with the cost basis. So you got to make sure that you get good software to track that. And, sometimes not even the software catches it all either. So that's, some of the things that we've talked about. I've been in Miguel and Charlie's course a couple years back when they were kind of kicking it off. I did several teachings, the tax portion of that in their course. I think like, I don't know, 4 or 5 times.
Okay. Perfect. All right. Phone line ready, guys? Yeah. All right, Steve, you ready for the first caller or no?
Yeah. Yeah. Shoot.
Awesome. All right. Who's up first?
7042, you're up. 7042, you're up.
All right.
Hey guys. My name is Peter, and I would like to start a junk removal company. I have a question for Steve. So I have a C Corp established in Florida, but I live in Los Angeles. Do I need to set up a new company, or I can use that one?
No, you can actually use it, but the problem is now you're not going to get the tax benefits of the Florida. So first off, I'm not sure why you're a C Corp. Is it because are you a U.S. citizen? Do you have foreign status?
Actually, it's a long story. I set it up a long time ago for Amazon, but it didn't work out. This C Corp never had any bank accounts or anything like that. Okay, because that's not the ideal tax structure entity that I would recommend as a CPA for that type of business. I would have you become a S corporation. How long ago did you start it? In November 2024. Okay, so you still have time. So typically the IRS will give you a late filing. So what you want to do is, and I have a book for this too, it's called A to Z LLC to S Corp. But in there, you can figure out how to become an S Corp. And I walk you through, I've got links in there and everything. So I would direct you there. But basically what you want to do is you want to turn that into an S Corp. You want to become for federal IRS tax purposes. And do that as soon as possible, because you get about 24 months within that time from the time that you created the corporation in order to select or elect S Corp status. So you're still within that window. So you want to do it the very next tax. I don't know if you're going to start using that company, but if you are, then you want to do that immediately. And there's a couple of forms that you want to file for that, because if you stay as a C Corp, you're going to get taxed. You're going to get what's called double taxation.
So not only are you going to get taxed for whatever your profit is potentially on that C Corp, whatever the corporate rate is, but let's say it's 15%, but when you go to withdraw the money out of your C Corp, you get taxed again. So it's double taxation. So that's why you want to become an S Corp. That's a flow through. So you don't get taxed as the S Corp. You just file a return and then it gets reported on your personal. Now, being in California, you're still going to get hit with the California tax rates on your personal, but you don't. The nice thing about it is you don't have to file a corporate return in California because it's like $800 just to pay the corporate fee to be a corporation or the franchise tax fee in California, which is extremely expensive. It's only like it's less than $150 here in Florida. So that's a benefit. But then in California, they require you to file a return too as well, which is another preparation fee. So if you're Florida, you don't have to file that extra one. You just file your federal. So that's what I would recommend for you.
Isn't it easier to close that C Corp and open S Corp in California in this case?
Well, so again, you can, but I said you're going to have to pay $800 to maintain the corporation in California just to have it. Then you're going to have to file the return and the corporate return for the state of California. Versus you don't pay the $800 to the jurisdiction of California. You file only for the federal, the same way you would do with California. You get 2 returns to do in California versus only 1 in Florida. And the fee is only $150 to maintain the company in Florida. So it's a win in Florida.
Mm-hmm.
I would stay away. I've got a couple of clients that they're California based and they formed these companies years ago and there's name recognition for it. So they can't easily just change and move to another jurisdiction or just open up another company there. So they maintain it, but it's expensive to have a company in California. It's just $800 just to maintain a company. That's not even taxes. That's just a franchise fee to have a corporation. Florida is only $150 a year.
Yeah, this makes sense. And the last question, since I'm gonna drive a truck, should I put this truck on a separate business and I rent it out to myself, or?
Yeah, you don't really want to have a truck if you're going to use it for business in your personal name, because if you get in an accident with it or someone else does, you get sued personally. So keep it in your company name and put it in a, get an insurance policy. So it only stays with the company and it doesn't come back to you personally.
Got it. Okay. Thank you very much, guys.
You're welcome.
All right. Good stuff, man. And phone number, guys, is 646-490-8334. Cool.
0394.
I can't see. That's an 8 or has 0?
646-490-0394 chat. If you guys want to call into the show. Also, if you guys want to cut the line, donate to the show, you could go on fnfsuperchat.com. I think we got it back up now, even though Stream Elements banned us because they suck. But yeah, fnfsuperchat.com, guys, to cut the line. Or you can Rumble Rant in, the last 4 digits of your number, etc., to cut the line. Answering all questions on anything, whether it's credit, real estate, structuring your business. Steve's also an expert at that. So who's up next?
Next up, we have 0702. You are up 07.